Home Depot's first quarter financial results came in slightly above expectations, with adjusted earnings per share reaching $3.43, just ahead of the consensus estimate of $3.41. While this number fell short of last year's $3.56, it still managed to push the stock higher in premarket trading. Total revenue for the quarter rose 4.8% year-over-year to $41.77 billion, beating Wall Street's projection of $41.59 billion. This growth suggests that the company is still able to capture market share despite a competitive retail environment. Comparable store sales, a key indicator of performance in the home improvement sector, increased 0.6% overall, with U.S. comp sales gaining 0.4%. This is a modest but positive sign, especially given the broader economic uncertainty that has impacted consumer spending. Transaction values also saw a 2.3% increase, reaching $92.76 per customer, indicating that shoppers are spending more per visit. Management reaffirmed. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Its annual outlook, projecting flat to 2% growth in comparable sales and flat to 4% growth in adjusted earnings per share. Despite the positive numbers, net earnings for the 3-month period declined 4.2% to $3.29 billion, compared to $3.43 billion in the prior year quarter. Diluted earnings per share also dropped from $3.45 to $3.30 year-over-year. This suggests that while revenue is growing, profit margins may be under pressure. Shares of Home Depot, HD, rose 0.7% in premarket trading following the earnings report, but the stock has declined over 12% year-to-date in 2026, trailing both Lowe's and the broader S&P 500 index. This underperformance could be attributed to broader market sentiment, investor concerns about the housing market, or a shift in consumer behavior toward online shopping and smaller home projects. The company's performance is being closely watched by investors and analysts as a barometer for the health of the home improvement sector. The fact that Home Depot is able to grow revenue in a challenging environment is a positive signal, but the decline in net earnings and the stock's underperformance raise questions about the sustainability of that growth. The company's guidance for the full year is cautious, with projections for flat to modest sales growth and limited earnings growth. Investors will be watching closely. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For any signs that Home Depot can regain momentum in the second half of the year. The next signal to watch is whether the company can maintain or improve upon these results in the coming quarters, particularly in light of ongoing economic pressures and shifting consumer habits. The company's ability to stabilize its earnings and return to growth could determine whether it regains favor with investors or continues to trail its peers.